All right, good morning, folks. Just getting everything pulled up here, and I think everybody's been admitted. All right, we have quite a few folks already joined, and I suspect there'll be a few kind of trickling in as we get started. But for the sake of, we have an hour here this morning and a fair bit of material to cover, so I am going to dive in. So I want to welcome everybody here this morning. So we're very thankful that you're able to join us for this exciting information session. So this is the first of two sessions that we're hosting on this topic. And so the second session is going to be in December on the 2nd. And that session will be done in French. So just a kind of plug here, if there's anybody in your network that couldn't join today that you think would want to join a follow-up session in French, we encourage you to spread the word throughout your network. So I'm Julie Grant. I'm a partner with Davis Peer, and we're fortunate to have the opportunity to work with the community housing sector, with the Community Housing Transformation Center on this project. So I'm going to get us kicked off, and I'll moderate the session this morning. And momentarily, we're going to hear from Luc Labelle with the center, and he's one of the leaders on the project for this. So. I want to open the session today with a land acknowledgement. So this the land acknowledgement has been formulated for Halifax, Nova Scotia, where I'm located today. However, a land acknowledgement is a personal recognition of who you are and your relationship with the land on which you find yourself and your responsibility to that land. So with that in mind, if you're joining outside of Nova Scotia, which I know many of you are, I encourage you to make this land acknowledgement personal to yourself. So we acknowledge that we are in Mi'kma'ki, the ancestral, traditional, and unceded territory of the Mi'kmaq people. This land is covered by the peace and friendship treaties, which establish the relationship and respect and cooperation between the Mi'kmaq and the settlers of this land. We recognize the enduring presence and contribution of the Mi'kmaq people, and we commit to working together in the spirit of reconciliation and respect for the land and its original stewards. Additionally, we recognize the African Nova Scotians are a distinct people whose histories, legacies, and contributions have enriched Mi'kma'ki for over 400 years. So I'll cover a few kind of context and logistical things here before we get into things. So the purpose of today is that we want to share more information about this project that we're embarking on. And so at the highest level, we're working to complete a feasibility study of alternative financing models that are really targeted at the community housing sector. And as part of this work, we want to assess the sector's readiness to adopt new financing options that could be potentially feasible. So through a panel discussion, you're going to learn more about the work and hopefully the importance of having you, the community housing sector, involved in this work as we go forward, because without you, it just isn't going to work. So a few kind of housekeeping items. We are recording the session. I think somebody made a note in the chat, just as a heads up. So additionally, we have a Q&A feature where folks can add questions as we're progressing through the material. Anything that comes to mind, fire it in there. And so once we get through the panel this morning, we'll try to get through as many questions as we can. And any that we don't, we'll certainly follow up with folks afterwards and try to get answers to as many of those as we can. So with that, I'm going to turn it over and ask each of our panelists to give a brief introduction of themselves. So I'm going to start with Luc Labelle with the center.
Thank you, Julie. So Luc Labelle, I'm a development manager. I'm working at the Community Housing Transformation Center. It's a pleasure to be with all of you today, this morning. I am replacing Stéphane Richard, which is my director of development. at the center. He's unfortunately been caught in a change of flight at the last minute, so he's literally above our head, flying back to Halifax this morning. Myself, I'm based out of Montreal, Teotihuacan, Tihaga territory. So for those who don't know, well, to begin with, we are here in this launching this process, this project together, because well, at the heart of this initiative is the belief that, well, addressing housing challenges requires creative and bold approaches. And basically, that is at the heart of most of what we do at the center. So for those who don't know, we do several things. We do manage funding programs. We do provide some service, guidance, support, and tools. We reference tools, we build tools. And maybe folks in Nova Scotia have seen us playing a role a few years back, supporting the sector, local groups, regional groups to come together and conduct a combined process that was able to um, achieve the establishment of a provincial association for the province. So we do carry some local initiatives, but sometimes it's also broader scopes, regional and provincial initiative as such. So today is one of those. And we recognize that, well, Atlantic Canada is facing unique particular uh, issues regarding, of course, housing crisis. Uh, we have an aging housing stock, limited affordable housing option, raising demand. You all know that in your own part of Atlantic. But we think we can together come up with those bold solutions that are necessary. And financing is a key point. Of course, it's a gap that one would, you know, face pretty quickly, trying to either uh, build a new project, acquire a new building, or just renovate and maintain the existing stock. So these are all issues that we are facing, and financing is at the heart of that. So how can we come up with clever solution on that end that would, in part, maybe integrate the action of the government, but also this process is about how can we come up together with our own resources with something that will help us to change scale. And changing scale of our action is that is a key piece in solving the housing crisis. You all know that. So we've been doing things in one way, um, answering to our local community needs, and that will keep being part of the solution. But also, how can we better answer to those needs of our community and the community next to ours, and to the broader regional needs in Atlantic? So here we are. Of course, there's traditional funding streams, such as the government grants, but they are vital, but you will recognize at this moment insufficient. So we need to address that if we want to change scale and also meet the scale of the challenge that are in front of us. Um, Also, many housing providers in the region are ready to grow, and we feel that we we've been doing our work for 5 years, and folks have been reaching out to us with very innovative projects. So we want to answer those, and again, financing is at the heart of that. So they are you know, communicating on the lack of access for stable and sufficient financing solution. Um, so we want to unlock that for them. And if we go around and quickly take a look at the what can be possible for Atlantic Canada? Well, of course, there's many opportunities out there, let's say. One of them, when we think about dormant equity, so many housing providers own valuable real estate asset. These are collective assets that, collectively we've been investing, government have been investing, community has been investing in. So how can we leverage that equity today to enable us to invest in new construction, acquisition, and maintenance of our stock. Diversifying, funding source. So relying solely on government grants and traditional lending is unsustainable, especially if we want to solve the challenges. So alternative financing models can create a more resilient and flexible system. Also, we want, and I mentioned it, we want to encourage sector growth. So by providing tailored financial tools, we can help organizations scale up their impact and meet the increasing demand for affordable housing. So why? No, I'll stop there. Does that covers it, Julie, to begin with?
Yeah, certainly. I think we can kind of jump around here a little bit too, and I think when we'll come back to you, Luke, in a moment, and we can kind of pull up some slides too to walk through. I think we can jump to Brian just as a quick intro, and then we'll get into a little more of the content. So Brian, over to you.
Sounds good. Hey everyone. I'm joining from St. John's, Newfoundland. I work with CMHC here in the province, and I'm part of our Atlantic Client Solutions team. The name changes now and then. It's called Multi-Unit Client Solutions. Essentially, my role is to work with community groups, housing providers, private and nonprofit co-ops, governments, anybody who's trying to deliver housing in the community, connect them with the programs and opportunities that CMHC has available through government initiatives. Before working with CMHC, I also worked with the City of Vancouver in their housing policy and project development division, and prior to that, in the community sector with a nonprofit housing provider in BC.
Thanks, Brian. And now we'll go to Nick.
Hey folks, happy Friday. My name is Nick Vandervelde. I'm super privileged and thankful to be here. I immigrated from the Netherlands about 12 years ago to Canada, and deeply privileged to be on this land. Whenever I go to Atlantic Canada, where I visit or vacation, it reminds me of home. I grew up in a small fisher's town, and I think parts of Atlantic Canada that emulates that for me. About 6 years ago, I became a chief financial officer of a municipal housing corporation in London, Ontario. And after 18 months, I quit my job, frustrated with the ecosystem, and I landed a job at a supportive affordable housing developer called Indwell. We are located in Hamilton, but offer 1,250 units across South and Southwestern Ontario, multiple regions. And roughly 50% of our tenants come to us out of homelessness, shelter, or hospital directly. And so it's a beautiful organization that does some incredible work. How I got to this project is simple. The housing ecosystem that I work in has changed significantly and has left me frustrated. There are many gaps in the development trajectory from a financing perspective that will do not allow us to move forward, even to the point now where we have 17 sites that we own or that we have a long-term lease for that we cannot move forward because of gaps in either our capital stack or just the cash flow obligation to get these projects to shovel readiness. This is a huge problem. And so out of this frustration, I have been searching and I've been on a quest to find other financing models from either Canada or across the world that can accompany and come next to housing developers and community to create more housing supply. And that's what brings me here today. I'm really excited to share some of my findings and inspiration later on in the presentation. I'll pass it back to Julie.
Thank you. Thank you all. So we're gonna go back to Luke here. And I know in your intro you covered some of this, Luke, but we'll pull up some of your supporting material on it. So the first question is around, can you tell us more about the project background itself and why it's important to look at innovative financing solutions in Atlantic Canada? So yeah, we'll pull up that material, and I think we can probably jump through some of it more quickly. Did
we lose Luke?
feel like we may have. Luke, are you there? Okay. How about
I can-
CHTC alternate? Yeah, okay.
Well, I was gonna say, first is the slides up there. I'm not seeing the slides on my side. They are.
The slide is up there.
Okay. Well, Nick, do you want to fire away then?
Yeah, absolutely. From what I understand is that when the center initially started this work back in 2021, they had some pretty interesting statistics when it came to the actual housing crisis in Quebec. Now, Luke is going to lean into that story a little bit. Luke, I was just describing to the audience kind of the birthplace and starting place of the plancher model, and kind of specifically attesting to the housing crisis and the statistics at that time in Quebec. And you can take over from me.
Yeah, thank you. Sorry, the internet and the whole electricity grid just flicked for a second, so I got thrown out the meeting. But yeah, thank you, Nick. So jumping right in with that. Yeah, so I've talked about this initiative we carried in Nova Scotia in support of the sector. And that theme was, for the establishment of a provincial association. Well, we wanted to carry and fill a gap that was assessed in Quebec. So we carried something somewhat similar of what we want to start here in Atlantic Canada. So starting to engage with groups around what would be the need, and quickly the consensus was identified around the fact that yes, we need to change scale. We need to simplify those financial and financing mechanism, and also we need to leverage a huge potential of equity. So taking just Quebec numbers, we're talking roughly of a housing stock, collective housing stock, combining co-ops and non-profit housing providers of $10 billion worth of asset, which half of it would be equity from our evaluation. And that's fairly correct because the Quebec province has also brought numbers that are very close to that. So we weren't too much far from the reality there. So that potential is also just dormant. We talk about dormant equity. Why? Well, most of the groups are very small also in Quebec. Something that is also true in Atlantic Canada. But the average size groups is from 20 to 40 unit size organization. Sorry, 40 housing units I'm talking about. So fairly small. It's 2,300 groups, individual co-ops or nonprofit that own those. So very dispersed throughout the province. And after that, well, each groups might not have the entire capacity or agility or financial literacy to use that equity. That's one aspect, but there's also the fact that as a group, as a nonprofit, or as a co-op, it's not my role to put at risk the building we own. So we tend to be risk avert when analyzing the option we have to use that equity. So how can we use tap in that equity and make it work into a model that is bringing more to everyone, as an investor, but as a user, as a borrower who wants to unlock new project. So maybe just a back and forth, Nick. Did I cover the aspect you wanted me to point out to?
Awesome. Wonderful. Good job.
Okay.
Oh,
Um,
go ahead.
no, I was just gonna say in terms of the if you want to advance the slides.
Yeah. Well, just
Talk a little bit
let
about
me because I saw what you were bringing on the other slides. So let me just maybe create that link with Atlantic Canada, if you don't mind. So of course there's many challenges. So why are we conducting this? Well, we conducted it in Quebec at first for some aspect. We thought at that point, and that's a process that is still going on, but has started 2 years back. Okay, so at that point, we, through our discussion with federation, association, and local housing providers and partners, because that was way broader than just us, the community housing sector. We wanted to bring municipalities, government, foundation, investment groups that are already partnering with the sector. So we thought that the Quebec sector was ready. Now we think Atlantic is ready also for this. And there's many things why we are bringing this initiative in that scope rather than conducting it province by province in the Atlantic. We think there's many aspects that is similar across your provinces. We have, a smaller housing market that makes it harder for organizations to attract private investment on one end. There's limited financial tools that are available to nonprofit housing providers compared to other regions in Canada. So that's a gap. And the sector is rich in community spirit, but often restrained by capacity and financial barriers. So these are issues, but things that we can work together. At least that's our belief. And through this project, we aim to explore, financing models that are not only innovative but also tailored to those unique needs that we can find in this region. So by engaging stakeholders across all four provinces, we're building a shared vision for a sustainable housing growth in Atlantic Canada. And that is, at the end of the day, if we want to change scale as a community housing sector, it means we need to pull and combine in a way or another our strength and resources. So that is this process. How can we come up with this?
Awesome. Okay, thank you, Luke. I think next we're gonna go to Brian. So Brian, from the, your background from the CMHC context, wondering if you can share some, based on your experience, what do you see as the main challenges for nonprofit and co-op housing organizations when they're trying to pull together a capital stack to support their projects? What are you seeing kind of on the ground day to day?
Yeah, I mean, there is a range of experiences in what folks encounter when they're trying to approach a project. There's lots of new groups that are trying out. They may have land. They may have some opportunities, have some knowledge. They may have experience. Maybe they did a few projects before. They're an experienced provider. So the challenges can range based on where you're at and where you're starting from. One of the biggest things is just, where do we start? the navigating a funding landscape is challenging. Different funders want different things at different times. You know, there's also the city and municipalities development process. There's land and legal things to deal with. Newfoundland in particular has a very unique and archaic land title system. So, you know, there's all sorts of things that folks encounter when they're trying to get a project started. Just where do we start? Something that I was talking with somebody recently the other day as well was just like the initial inquiry. So somebody calls me, they say, hey, what CMHC programs are out there? What's available? I try not to get into too much details on the first conversation because there's a lot of things that we ask for. So yeah, so you know, I can run down the checklist with you if you want to know exactly like what you got to do, but that's not a great way to start because you're probably going to go away and never talk to me again because there's too much stuff to do. So I think, yeah, just, you know, just some, I mean, I think there's a later question about opportunities, but and I do my best. I try to guide folks to say, you know, here's where you can start. Here's some of the first things that you should think about. Like, you know, here are some of the initial things that you should do and explore. More of an exploratory conversation. I don't dive into program details so much right away. But the other thing is funding cycles. They're unpredictable. I'm working with federal programs. They come when they come, and when they come, you got 2 months to make a submission. So are you ready? Maybe, maybe not. It's not a time to think about doing a project when funding is announced. You need to have thought about that project well in advance because every time a government program is coming out, more and more of these programs are looking for projects that are shovel ready. So what do you got to do to prepare before some funding call and some future budget is going to come out? And they will. There's a housing need, so there's going to be opportunities that you can pursue. And you're not always going to know when they're going to be coming out, and maybe it's a federal opportunity, but you don't have the provincial lined up at the same time. So you know, those are gaps that folks are experiencing all the time. I've been in Newfoundland for the last 4 years. For a long time, there weren't a lot of provincial resources to work with until over the last year. There's been lots of great projects coming forward that are backed by the province. But before that, it was more of a challenge to help folks access CMHC programs without the other levels of government or other funding opportunities at the table at the same time as well. It's just a reality of how the time, like CMHC's timing is not going to line up with other governments' timing. And as an opportunity, later on, there's an opportunity for governments and folks to try to do that better, for sure. We just touched on resources, so organizational capacity. Expertise is one thing, but also time, like folks are stretched thin, right? Like if they're an existing organization, they've got existing operations to deal with, and they may have limited funding. So any way that we can, as a sector or as a sector support community, come to the table with some way to support a group with getting a project off the ground, that's really important. There's other groups that are really well-meaning and that may just not be organizationally ready. So organizational readiness is another consideration versus project readiness, you know. So construction trades, like accessing trades, you know, that's a real challenge. Anybody who has built relationships in the building sector, construction sector, those are really important to relationships to rely on when you're getting a project ready. Yes, we can fund consultants, but are they getting the right consulting advice? You know, that's I don't have control of what a consultant says or who they hire, but you know, there's a range of I guess expertise that may be appropriate for a certain project versus other projects. So choosing well your consulting team is really important. And as much as we talk about having a good construction and skilled trades at the table. I think we also need to be investing in operational and property management skill development for the sector. We need a lot of people to come and operate housing. We need a lot of people to build it. We need a lot of people to operate it. So we need to be thinking also about how do we build up a property management skill set. And I know, like, from my experience in BC, that's kind of the origin of the BC Nonprofit Housing Association, was a group of nonprofit operators coming together to better advocate for themselves as a sector, but also to do training, to do professional development for professionals working in the nonprofit housing sector. So, I think there's a lot of opportunities and challenges there. The risk taking, Luke already mentioned as well. So, there's certainly I guess an element of needing to take more risks, be a bit more entrepreneurial, rather than, like I said, relying on government funding programs that come and go and that may not line up with where you're at. So I'll leave it there. There's all sorts of things to say about that, but
All right.
Yeah.
Thank you, Brian. Appreciate the candidness and the awareness of, the challenges of the level of detail and, the funding cycles and all that. I'm sure folks on the call have experienced the other end of that. So I'm going to invite Nick to kind of to walk us through a bit of the project approach that we're taking here on this specific project. And then I'm hoping, Nick, you can talk to us about what are some innovative financing models that have inspired you in this work as well.
Yeah, thank you so much, Julie. And I'm going to talk about three things. And so for the folks that are listening to this or watching this, I think this is an important part of the presentation. So please lean in. I'm going to talk about three things. I'm going to talk about the project approach. I'm going to talk about the project timeline. I'm going to then shed some light on the development trajectory. So kind of the A to Z of back of the napkin idea to have an actual project built. And then 3 or 4 financing models through Canada and the rest of the world that have really inspired not only us, like me, but also the team itself. And so, as Luke has mentioned as well, you kind of understand where this project was kind of birthed from. Quebec, the plancher model, being able to leverage dormant equity, and it's a very innovative approach to unlock financing and also to some degree knowledge to accompany housing providers to either renovate, acquisition, or build new projects and new construction. So our approach when it comes to this feasibility study basically has 4 segments. You can see them on the screen. We're starting with a market analysis to really understand, what type of assets are in the community housing sector across all 4 provinces, what kind of knowledge is out there, who are the players, and then also, more importantly, are there financial institutions, credit unions, or other financing bodies that can support this work or already doing great work? And then in terms of that, we're going to create a current state document that indicates here are all the wonderful and great things that are happening in the community. And here is where we see or where the community see potential gaps. And so we're going to move that into design workshops. So we're going to co-create with community and a variety of community, including community housing providers, financial institutions, and even governments to what could be the solutions to the problems that we see. We will then create a feasibility study that basically speaks into those processes, and we'll leave this project with some really strong recommendations on what are the next steps from a design perspective that could actually put a financing solution in place that would unlock that acquisition, renovation, and new construction in Atlantic Canada. So the timeline that we have in mind for this is as follows. And I'll wait for the slide to follow me as well. Oh.
I don't think there is a slide on that.
Oh, okay. I thought there was a slide on project timeline. So project timeline, we're really looking at producing the design workshops in both one or two workshops in December, but also one or two workshops in January. And then the current state document, we're looking at February, March for that to kind of land. And so we are actively engaging and reaching out to community housing providers in Atlantic Canada, financial institutions in Atlantic Canada. And so if there's an interest or a need and we haven't connected with you yet, first of all, our apologies. That's not the relational, that we want to be relational in that way. And second, if there is a need or an intrigue for you to partake in the workshops, feel free to reach out to our team. We'll gladly have you partake. Now, the last part that I want to talk about is the development trajectory and the innovative financing model. So if you can switch to that slide, that would be lovely. So there are many ways to fund new construction, acquisition, redevelopment, and renovation projects to improve and expand affordable housing. There are three that I want to talk to you about. Now, this is the part where I get excited. And as you may know, the more excited I get, the faster I talk. So I'm going to try to slow it down as much as I can. I want to talk about community bonds. I want to talk about the plancher model kind of in some more pragmatic detail. And I want to feature two organizations, one called More Homes from the UK and then Housing Australia from Australia. Before I do that, I just want to quickly touch base on the development trajectory. So if you go to the next slide, what is helpful for me as a finance person that actively lines up funding and financing for affordable housing projects is to think about the housing development trajectory in basically in 4 phases. And those phases are exploration, design and development, construction, and then lastly is occupancy. And the reason why I wanted to mention this is we clearly see some gaps in the financing trajectory when it comes to funding and financing these individual phases. And I'm going to talk through them very quickly. And we will share these slides with you afterwards if you find there's some value there for you or if you find it's helpful. So when we have an idea on the back of a napkin and we don't own a site yet, we typically say that a project is an exploration. We're kind of just understanding what kind of site do we need, and if we have a site, is it feasible to build on that? Is the project financially feasible in its entirety? And so these are some questions that you try to answer during the exploration phase. Once you purchase a property conditionally or just it's a firm sale, and now you own the site, you actually move into the next phase, which is design and development. And in design and development, basically there are 2 or 3 trajectories that happen at the same time. One is the environmental approvals process. The second is the municipal approvals process. And the third is your design process with your design teams. And I'm sure that there are some planners on the call, so I hope I'm not butchering this by making it as simple, but that's essentially what's happening in that phase. One of the reasons we wrote hardest phase there is because organizations like a CMHC, other financing organizations, or even banks and credit unions, they think that this part of the project is the most risky. Hence, they are the most risk averse in actually providing either financing or funding. And now there are some neat programs that organizations can offer. CMHC can offer the seed funding program, but typically those dollars available are not big enough or large enough to actually fund all the way to the start of your construction phase. And so this is where we see many challenges, both in Ontario, but also in Atlantic Canada, based on the housing providers that we've chatted with. So then after design and development, so you have your building permit in hand, you have your construction drawing, so your final drawings in hand. You basically now start underwriting some financing or funding applications. You move into the construction phase. And after you procure a construction contract and a construction team, you're off to the races, and you are going to start construction that eventually will lead into the project being built. Now, once the construction phase is done, you go into occupancy, where the building is now complete, and then you're basically you're basically ready to welcome commercial tenants and residential tenants into the building, and then there's some other phases there. And so I always find it helpful to have this frame of reference when I talk about financing models, to understand which part of the development trajectory they can actually fund or finance, and then where there are gaps distinctively that actually holds the development of housing back. So we're going to go into a few different innovative financing models now. We'll start with community bonds. If you have a willingness to type in the chat if you are aware of community bonds, or if you have played around with community bonds and the implementation of a bond. Please put that in the chat. We would love to know if you have any experience there. But community bonds are basically a form of social financing that allow nonprofits, charities, and co-ops to leverage their community of supporters. And the way that it really works is you as an organization have a financing need. You go to your community and say, we have a financing need. Will you be able to invest some of your capital, some of your dollars into a project? We're going to hold those dollars for a term, 2 years, 3 years, 5 years. Every year it will pay you an interest. And then after the term is done, you will repay the principal amount back to you. And that's essentially what a community bond is. And this started in the church communities in the late 1960s and 1970s, where if a church had a leaky roof, they would go to their congregation for a loan. The loan would be issued by the congregation, and the church would pay the congregation back over time. Now, our organization, Indwell, we launched a community bond in March called the Hope and Homes Hamilton Community Bond, where we are basically looking to fund the exploration and design and development phases of the development trajectory through these community bonds, because we fund about $1.3 to $1.5 million until a project is ready to go into construction. And so if we have 4 or 5 projects on the go, that's a lot of cash flow that we have to manage. And so instead of going to TD bank at 8 or 9% on a line of credit, we can actually engage our community with a lower interest rate that still makes sense to them, but also makes sense to us. And so we launched in March 2024, and then as of November this year, we've raised $5.6 million by bringing together 85 different investors. 83 of those are retail investors, so non-accredited folks investing between $1,000 to $50,000, and then we have 2 institutional investors that have also come in. So that's essentially what community bonds do and how it works, and it's a wonderful way to develop that pre-development, so everything before construction starts, sometimes even during construction, so bridge financing, and then some organizations use community bonds as long-term financing, where the bonds actually act like a mortgage. So we'll go to the next slide, if that's okay. And I see some comments in the chat, people thanking me for the explanation. Great. I don't get that feedback often, so I appreciate it. So quickly on the community bonds, so it can finance each phase of the development. What is really unique, and this is what I've learned recently, is that when someone invests into the organization that you lead, you actually create a relationship with that investor that can be transformed over time. And it's one of the biggest learnings that we've had with the community bonds, is that those people may become donors at one point, or they may become board members at one point, or sit on your finance and audit committee. And so it's a really neat way to start a relationship. Now, the challenges with a community bond is that there are significant startup costs, and it takes significant resourcing to not only set up, but also to maintain. And so these are things that you want to be aware of if you are a community housing provider, looking at financing and then going this route by activating your community. So we'll go to the next slide. And the next slide is going to talk about the plancher model. So when I heard about the plancher model, it was one of the first times in probably 3 years where I actually got excited about a financing tool that could alleviate some of the challenges and frustration that I basically face every day in my role. And what I like with the plancher model is basically, if you start at the little house on the slide, you see that there's dormant and available equity that is available, that can be leveraged, but oftentimes isn't leveraged, either because there's not enough resourcing or there's just not a need to leverage it. What you can do is then you can collateralize this dormant equity through a financial institution. So basically like a refinancing the dormant equity through the financial institution, and then the institution issues a line of credit to the plancher model. Now, because the equity is being collateralized or being used, the plancher model pays out a 1% interest to the housing providers that pledge their dormant equity. So instead of the equity just kind of sitting there in your balance sheet and not really working for you, now you're getting a 1% financial return each year as the equity is pledged to the fund. And then what we basically do with the dormant equity, and this is my language, it's not official finance language, we create a super mortgage by combining all the different dormant equities from housing providers, and then we loan that super mortgage back to the housing providers themselves. And so if you have to renovate your housing stock, you can do that through the super mortgage. If you need a loan for new construction, you can do that through the super mortgage as well, and so on. And so there's different financing products that the Plancher Fund can provide, and really eliminate some of the barriers that I think exist in getting more housing into the market. So
Nick?
the next slide. Oh, go ahead, Luke.
Yeah, if you don't mind, just because there was a question and my colleague kind of answered it, but in the chat, but just to make sure, so the Plancher Fund, as you mentioned, is a loan-based model. So there is investors, as you just pointed out, some of them are coming with dormant equity. We're blending investment with other sources, and then we are giving loans, issuing loans that are below the market rate. So there's advantage on the user side also of it. That's the only comments I wanted to have. Thank you.
Great stuff. Thanks so much, Luke. I do see some questions popping in about community bonds, and perhaps we can answer them at the end. But coming back to the Plancher model, benefits are that it can finance each phase of development, which I think is super exciting. It's an innovative way to leverage dormant equity, so equity that doesn't really do anything for the organization besides sit on the balance sheet. I think it's a quicker and easier access to capital, and then they envision to have kind of housing knowledge and wisdom part of the model. And so even if you're an organization that just has an aspiration and a vision, perhaps not the actual pragmatic knowledge to develop housing, the Plancher model can provide that. Some of the challenges that we see or that we anticipate is that the model hasn't been applied in practice yet. I think they're now starting with an initial project, and that it really requires scale. And what I want you to hear is it requires collaboration by many different organizations and just levels of community in order for this project to work. And that can be time consuming and challenging to some degree, but not impossible. And I have high hopes that this project is going to kick off and metastasize in scale, or metastasize in size, so that it can get the scale that it needs to deliver this ongoingly for a long time. Now, the last two models that I want to talk about just briefly, and this is where I got pretty excited, are two initiatives from other countries. So I'll start with More Homes in the UK. So More Homes is a unique borrowing vehicle for the UK housing sector. They basically create a public listed corporation that issues shares. These shares are then owned by 60 different UK-based nonprofit housing providers. All these housing providers have capital needs. They need mortgages, they need lines of credits, they need loans for a variety of renovation projects. And instead of looking at all of these loans and these needs individually, they look at these loans collectively. And what they do is they basically say, okay, we have 250 million pounds of needs. Instead of raising that individually, they go to the stock market and they issue bonds. So they raise capital on the stock market. They have their debt is traded publicly on the London Stock Exchange, and they're able to raise massive amounts of capital in a very efficient time. And then the capital that they raise, they basically loan back to the housing providers themselves. And so they had a first issuance of debt in 2019 of 250 million pounds, which is about 442 millions in Canadian dollars. And the total loans issued to date is roughly 1,000 million in Canadian dollars. And so they have a scale, they've achieved a scale that works really, really well for them. There's a Canadian equivalent to this model called HIC, Housing Investment Corporation. If I've researched it correctly, they've raised about $73 million in total by creating a bond offering and then directly offering that to pension funds and life insurance companies. That's one of the models that's inspiring me locally. And just a larger version of that would be More Homes in the UK. And then lastly, folks, just to see what could be possible, I think Housing Australia is really kind of the cherry on top. And so they started as an organization called the National Housing Finance and Investment Corporation, and then they renamed it to Housing Australia. It feels like CMHC based on what I understand locally. But basically how it works is that traditionally community housing providers have access to financing from commercial banks. And so they have what they would see higher interest rates. They also have more like restrictive terms. Housing Australia basically responded with offering financing to the community housing sector, but through a different structure. So they aggregate loans. Aggregation, or an aggregate, is like a fancy finance word for putting things together. So whenever you hear aggregator, you think that. And so what they do is they basically go across the entire country and say, what are the different refinancing or mortgage or loan needs that you have? And we're going to pool that together. So I'll kind of skip through some of the details here, but they've basically issued 2.2 billion Australian dollars in bonds. And over time, they've provided $3.4 billion in loans to all different community housing organizations, supporting 17,500 new and existing homes, which is just incredible. And they do things like, oh, you need a $300 million loan? We'll give you a 15-year fixed interest rate, interest-only loan. And they are able to do like unique financing, things like that, would just, I think would really, could really solve getting started in building more housing, affordable housing in Canada, if we could achieve similar financing products, but also a similar scale. So anyway, these are just two financing models that have really inspired me to see what's possible. Because I'm sure that you folks are experiencing the same that I experience from time to time, where you go to for me, I go to a jiu-jitsu class or drop off my partner at yoga. And every time I leave my house to the gym, there are multiple tenting encampments. There are people sleeping rough. And we want to alleviate that. We want to be able to provide a place where these people can be safe and where they can be adequately housed and kind of rebuild life in a different, perhaps more healthy way. And in order to do that, we need more supply. And so how do we solve the supply issue? We find out ways that we can bring funding and financing to the housing ecosystem, some knowledge and resourcing accordingly, and so we can get more housing into the system. So I'll pause there for a second. I've talked enough. Thank you so much for your time, and we're more than happy to answer any of your other questions that you have. So feel free to keep putting those in the chat, and I'll pass it off to Julie to go to the next phase of her presentation.
Thanks, Nick. Always super informative whenever I hear you talk about complex financing things. So I think we only have we have 7 minutes left. Brian, hoping we can go back to you rather quickly and just share whether you've seen, some success stories. So like, thinking of the different organizations that you're working with, what has helped them advance their projects or be able to get kind of a project off the ground, if you have any, 1 or 2 tangible examples, and then we can kind of cycle back to a couple of questions that are in the chat.
Yeah, for sure. Yeah, I can touch briefly, and there's lots more I can chat about, some future call or other discussion. I guess one thing I would say is that it's all like, I mentioned earlier, programs come when they come, like financing opportunities, you never know when it's gonna happen. So it's been really successful when groups have been working on a project in the background, sort of in between government funding calls. Whatever they can do to advance that project, like Nick just talked about, that risky phase. So if you're able to continue advancing some of your municipal design approvals, getting more clarity on costing, that sort of stuff, if you can do that, and keep that going, that's going to be to your benefit when an opportunity arises to seek for funding. And I'm talking from government funding lens. Obviously, we're also identifying here that we'd like to find opportunities to not rely on government funding. But the reality is we are relying on government funding in lots of ways and lots of times. So you do have to continue working on your project for that to be ready. The other piece is organizational readiness. I think I mentioned that. Having a strategic plan, like knowing where you want to go as an organization, having put some thought and intention into that, that can really, I guess, intuitively or sort of in the background, like position yourself to be willing to take on a project when an opportunity arises. Keep working with, opportunities for land contributions, especially municipal sponsors, if the municipality is able to get something in there. So, those relationships and partnerships are amazingly important. I did want to mention the success we had over the last year working between CMHC and Newfoundland Labrador Housing to come together, especially with the provincial investment that came out. CMHC was able to come to the table to, kind of match off or close off the funding needed for a lot of projects that were receiving a pretty substantial forgivable loan from the province. And that came with some flexibility that, we had to present and get support for in our programs, because sometimes our programs are not super flexible. So we've been able to do that and kind of right sizing our underwriting and approach, especially in cases where they're small rural projects or whatever the case is. So early funding is key, working on a project in the background, making sure your organization is ready and keeping the relationships going with all the sector capacity investors that are at the table. So, yeah.
Thank you. I'm gonna fire one to you, Nick, quickly. I know we only have a few more minutes, but we have a question about wondering oh, you answered it. Do you want to fire away there?
Yeah, I can speak. Speak you through. So the question is, if community bond is an opportunity for organizations that don't have a direct project in mind, is that something you've seen before? So here's my posture. I think that the community housing ecosystem needs to be less reliant on government funding, and recognizing that government funding is required to make units as affordable as possible, and that there's a certain level of support and financing and wisdom that the government provides. And so you need them in order to do these projects. That's a thing on its own. Regardless of that, I think it's important that you have more autonomy as an organization. That means you want to develop financing tools that are not contingent on government, political environment, etc. A community bond or a bond fund, I think, is a great way to do that. Two things that you have to keep in mind. It is better to have a goal in mind. So it could be operational cash flow. It could be a stack of a development project. Because once you raise community bond funds, you do have to pay interest. And so to raise, let's say, $1 million, for that to sit there without being deployed, that's just going to cost you money. However, I am a big fan of creating these financing tools to have more autonomy. And so if you want to get started on that process and design a bond offering, and then push that out into the community to raise capital, as you develop potential intentions or aspirations to deploy those funds, I'm all for it. And so I highly recommend that you look into what a community bond could mean for your organization. And then there are organizations throughout Canada, Tapestry Community Capital being one of them, that we also use, that can help you in kind of that aspiration. And then Davis Peer, as well as an organization, has a willingness and the knowledge to come alongside you and explore what's feasible and how to move that forward. So I'll pause there, and I think my written explanation in the Q&A is also helpful.
But if I may jump on that, and I'll go into maybe a takeaway from the session, Julie, if you may, because I see the time running. There will be good reason to set up multiple solution to raise money and unlock our project. So community bond is one. There's several. Nick did a great tour of explaining some of those. Now we have to be very clever. Collectively, I mean, if we want to solve the housing crisis in a meaningful way, that will structure our action in the future, also not just today, not just tomorrow, but in 30 years, 50 years, 100 years. And now when we think of 100 years, we're talking about $1 billion size of a solution. And then, that takes so much effort from individual organization to go out there you know, let's take the community bond example. You know, we're putting a lot of stress on the community to gather their financial resources to commit for one single project. Sometimes it's only an aspiration, and we wish we would be able to put that forward right now to be ready in 5 years to undertake the project. So collectively, how can we be smart about the efforts we're putting toward governments, toward our community, to leverage all those financial resources toward our own organizations also, and put that into a model, a financial tool that will be replicable and you know, have multiple ways of growth and maintenance of our portfolio. And that's, I think, what we want to achieve with this initiative. So ways you can engage, there has been explanation on that from the Davis and Pierce team by Nick. There will be focus groups that will be carried, but also we will need at some point information about your organization, about your buildings, to better assess what is the dormant equity, what is the financial reserve you guys have on at your end, um, and how can we put that into a solution, a financial model that works for everyone, that gives some return, that gives some better rates, or gives some financial leverage to unlock all those projects we want to achieve. So some might hear today what we've been explaining and saying, oh, that's maybe too far for me. Well, that's fine for today. At least stay tuned if you have some interest in that. Some of you are already committed and have been waiting for this to start. So, you know, we are welcoming everyone with open arms. I think we need everyone at some point. So if it's today, if it's tomorrow, you know, we'll be asking some input from you, from your aspiration, your dream, and your solution. So this is a very open ground for everyone to take part in it. And of course, it's an ongoing conversation. So this, we have a framework to work with, but it will evolve through this process. Sorry, Julie, I took it on my side.
That's all good. I would just thank you, everybody. Appreciate all of your time this morning, and we will go through all of the Q&A, whatever is still in there, and kind of go back through all the chat as well. I know there's been some questions posted in there, and we'll make sure that we get answers to each of them, and we can share that out along with the slides. So you'll be hearing from us, and we look forward to the next steps here. Thanks, folks.
Thank you, everyone.
Bye.